All right, let's get right to Michael Lee, portfolio manager at Altium Wealth, to talk about why he's somewhat bullish on stocks overall. Some people are seeming a little more cautious these days, but you look at some of the big picture stuff and you say buy them.
Yeah, look, the U.S. economy is in fantastic shape right now. It doesn't look like there's any sign of slowing. A little bit of softness in some manufacturing survey data, not actual data. I think Boeing in itself, the problems that they're having is going to put a dampener on some GDP this year. It's
right.
Those troubles are big for the U.S. economy. Outside of that, seas are calm, skies are clear. The Fed is going to keep interest rates lower. What is going on right now is we are trying to reset the world order in terms of manufacturing and trade. Every other major industrialized country in the world subsidizes trade in one form or the other. And so by keeping interest rates lower, the Fed is adding to that policy. We're at trade wars with Europe. And much more so and more popular to talk about is China. Until that's resolved, I can't see interest rates going higher, and they'll probably keep them lower.
I love the dialogue. I love that the president went and he's speaking, with both Xi and Kim and getting out there and keeping the dialogue open. I think when you have that sort of kind of connection and communication, that ultimately is good news for the stock market. But the question is, is a deal really getting done? And when do you think that might be happening? And what happens to the stock market in relation to these China headlines? One at a time, What
I want to see as an investor is incremental good news with the completion of a deal at some point. I absolutely think there will be a deal because China has no choice, right? China needs U.S. dollars. They need direct foreign investment, and they're just not going to get it if we can't put together a deal. What the Trump administration wants to do is take the global supply chain out of China, and they want China to open up their markets for direct foreign investment. So while these two things are happening, and while they want those things, we're going to use both the carrot and the stick with them. So that has not really caused a lot of damage to stocks overall, but what it has caused damage in is the uncertainty in manufacturing, and you're seeing that in the survey data we got today.
Yeah. And that's a little bit of a concern. I mean, some of the economic data has been mixed. I mean, jobs have been good. We're waiting for jobs on Friday, so I'm excited for that. But abroad, we've had some tough numbers. I mean, I saw the German Bund on the move to the downside. I saw, Eurozone PMI. There's some concerns about the global, slowdown and how that could ultimately trickle our way.
Yeah, as well. It's always important to remember that it's the U.S. GDP and the U.S. economy that drives the world, not the other way around. And a big reason why the rest of the world isn't doing so well is because of the tax reform package we had here. It's now a much more attractive investment to invest in the U.S., and you're seeing it in the consumer. So consumer spending's up about 4.2% year over year. Personal income's up 4.1% year over year. That was a great data point we got on Friday. If you look at consumer debt service, so what it takes to carry the debt as a percentage of take-home income, it's at the lowest level in 30 years. Consumer debt to assets, lowest level in 30 years. So when you look at those things in a total picture, yes, debt is at an all-time high, but relative to assets, a very, very low level.
That's a good way that you put that. So you think that you said the Fed's cutting, the consumer's on fire, and you like Visa as one of the reasons, right?
Yeah, I don't see the consumer slowing down anytime soon. You look at the labor market as well, 1.3 million more jobs available than people looking for work. You look at the quits rate, so people just up and quit their job without a new job. That's also near its all-time high. Right. Unemployment near the lowest levels on record. Weekly jobless claims at 40, 50-year lows. As a result, I think the U.S. consumers are in fantastic shape. They're going to continue to spend. What better way to profit from that spending than Visa?
Yeah, and I mean, it hit an all-time high today. I see it pulled back a little bit, but it did hit an all-time high today. When you think about Visa overall, I mean, are you concerned at all about competition, or how much upside do you think this has? It's up about 30% this year. Well,
I think the upside has more to do with the macro economy than the individual name. It's a very large hedge fund holding, and a lot of these, this is the same story you've heard with the Amazons, the Facebooks, the Googles, that once these stocks get going to the upside, they generally continue going for a long time. So if we do see some chinks in the economy and the consumer side of it, then obviously there would be time to reevaluate that position.
Right. I mean, it really is. It's just such an indication of that the consumer is feeling confident. Like you said, if you're not quitting your job unless you really feel confident that you can get another one. What do you think the Fed does, and what do you think the Fed should do?
Well, I personally think the Fed should have been much more aggressive in raising rates in 2014, 15, 16, 17, and 18. So if you look at the Taylor rule, which is a rules-based system of looking where short-term interest rates would be based on inflation, growth, and output, that puts us somewhere between 4.5% and 5%. Okay, so we have departed all economic norms. Right. In terms of setting short-term interest rates. It is not a data-driven Fed. It is a Fed that I think is on board with this resetting of the kind of global world order in terms of trade and manufacturing. While the economy is doing great in this country, you still have half the country that doesn't have $500 saved. There's really a lot of depleted areas across the Rust Belt where manufacturing once exists. The average life expectancy has dropped the last 3 years in a row for the first time in 100 years in the U.S. So what's happening is all these other major countries have done everything they can with low rates, trade barriers to subsidize manufacturing, and you're running into a situation here where we can keep rates low, we can put up trade barriers and subsidize manufacturing that way, or we can give out universal basic income. And so when you look at this administration's policies on immigration, tax reform, regulation, trade, you see it trying to solve that problem. Sure. You know? And wages are up about 4%. The bottom 10% is growing roughly 3 times as fast as the top 10%. So in a way, it's working, but we'll see where it goes from here.
Right, but you didn't say whether or not you expect to cut.
Oh, I know. I absolutely expect the Fed to cut rates. It's just a matter of whether they do 25 basis points or 50 basis points by the end of the year. I wouldn't expect too many cuts. We're absolutely they're absolutely going to cut rates. I don't know how much more. I guess it depends on how the situation with China plays out. Yeah. But that's what's really these trade wars are what's driving the Fed, not necessarily inflation, output, growth.
Right.
So.
All right, Michael Lee. Feeling very confident about our U.S. consumer and our markets. Portfolio manager at Altium Wealth. Great to see you.
Thanks for having me.
Up next, I will sit down with the CEO of Usio about